Money and Me on Your Money, only on Money FM 89.3.
We're all about your money here on Money FM 89.3. I'm Michelle Martin. A warm welcome. USDC depegged because of Silicon Valley Bank. Will it survive the bank's collapse? And what do advocates of cryptocurrency see ahead when it comes to future systemic shocks? Given what we've seen so far, 3 shutdowns in the banking industry: SVB Financial Group, Silicon Valley Bank, Silvergate Capital, Signature Bank, they've all set off fresh set of stresses. SVB's failure triggered a knock-on effect in the crucial market for stablecoins after digital asset giant Circle, one of the biggest issuers of the widely used tokens known for their perceived safety, revealed that it had $3.3 billion worth of reserves with SVB. This led to Circle's USD coin to slip below the intended 1-for-1 peg, sending a shock through the market. It's really quite a 7-day chart to look at between March 11th and March 13th. While the US Fed has stepped in to guarantee deposits and Circle's reassurance to investors that the $3.3 billion USDC reserve deposit will be fully available to people, what does this mean for USDC's future? And what does the shutdown of crypto's 2 major bank players mean for cryptocurrency players and investors? I've invited Geoff Ira. He's co-founder and CEO of Trade Together. Good morning, Geoff.
Good morning, Michelle. Thanks for having me today.
Always great to speak with you. Help our listeners understand the links between SVB and the crypto universe.
Yeah, of course. So USDC as a stablecoins issuer is working with several banks across the world. The first reason for this is because they want to have their collateral put in across multiple banks to avoid any concentration risk, which is the best approach to take. So therefore, SVB Bank was one of them, and they had 3.3 billion US. So when last Wednesday, a couple of influencers in the VC space contacted lots of companies to withdraw the funds from SVB, in 24 hours, 40 US billion was withdrawn from this bank. So obviously, and technically speaking, since there was a discrepancy and an inefficiency in terms of information, a lot of market players didn't know exactly what happened for this 3.3 billion. So obviously, the booking order across all the crypto exchange started to put a lot of pressure on the USDC, and the depeg started to occur.
Now, over the weekend, we saw the Fed over in the US stepping in, right, to guarantee all deposits for SVB, adding confidence, of course, hoping to add confidence to the banking system. And that sparked a small rally in crypto markets. Right. With this bank rescue, does this mean that USDC's problems are solved, Geoff?
For sure. Since the beginning, we consider at Trade Together that USDC is one of the top stablecoin qualitative digital asset. And we think that what happened last week is definitely a difficult operational incident. And it shows a bit of weakness into the structure of how to manage a stablecoin. But at the same time, if I'm playing the advocate of the devil for a second, I prefer to know exactly what happened and to have this depeg for as less time as possible, of course. In that case, it was for a few days, and now we are almost at $1, instead of having a fake oracle telling me that it's still at $1, but in reality it's not.
Okay, so you say more can be done with the management of the stable coin in terms of transparency of what happened.
More transparency, indeed. And I think I suspect in terms of governance, maybe the capacity for the stablecoin issuer to mobilize more capital to defend the peg, because obviously when your booking order passes from this amount and suddenly that amount, it takes a bit of time to adjust. So I guess this is the area of progress that any stablecoin issuer has to work on. But in general, I think they did a good work. Yeah.
When it depegged, I think it reached about 0.85. How has USDC performed in terms of price post bank rescue?
Yeah. So first of all, when USDC reached 0.87, a lot of market actors were asking whether we were facing another UST terror. For our listener, I'm referring to the UST Terra collapse of May 2022, when we saw a stablecoin worth 60 billion going to zero in few days. So in that case, it was different because, again, the collateral behind USDC is much more qualitative. It is absolutely not comparable with UST Terra. Behind USDC, you have a treasury bill, you have cash. USDC has all their collateral across 7 banks. So we were confident that they will restore. But of course, for a second, there was a bit of anxiety across the market. Otherwise, we won't have faced what happened.
All right. So it's almost regained its peg, but it's not quite there yet in terms of 1-for-1. Is that right?
It's honestly, it's 0.9965. It's almost business as usual now. Yeah.
A lot has happened since, of course, SVB's collapse. A lot of debate on this phenomenon of a bank run as people try to understand what happened exactly. So from your perspective, what are some factors worth considering when you look at the speed of what happened with SVB?
Yeah, of course. So what we have tried to do at Trade Together as an actor in this space was, first of all, to keep our calm and not to spread any rumors that we don't know, and to not compare what happened to the 2008 crisis, because it was totally different, number one. Number two, it is true, Michel, you're right, that when you have some contagion like that, a bank run in 24 hours, 40 billion is leaving a bank in 24 hours. What is interesting in 2023 compared to the 2008 global financial crisis is in 2008, there was 1 million Twitter account open with 200K Twitter account active versus 2023, where you have 300 million Twitter accounts across the planet, even more. So when someone has 10 million followers and start to say that he has some doubt about the balance sheet of a bank, the impact is huge. And then you have to choose your camp. But if you, I'm playing the advocate of the devil here, Michel. If my VC lead is telling me, Geoff, you have to remove your fund from this bank because we have some information telling us that it's not good. Of course, I will consider this information because obviously that's a close partner, right? But I also understand totally, and I was supportive of that. This is what we did last weekend. We tried together to say, guys, please calm down. SVB is a 40 years bank. They have been the number one partner of lots of tech companies. We can't just live like that. And maybe we will discuss from a regulatory standpoint. It's a gray zone because you can say, oh, someone had some insider information, but at the same time, it is also human to inform your network that something is wrong. So that's a tough question. Yeah.
Okay, really tough question, Geoff. Thanks for joining us live here on Money FM 89.3. Now, when you look at USDC's loss of the dollar peg over the weekend and all that, automatic selling that must have happened with the bots kicking in, trying to stop their losses.
Yeah.
How do you think investor sentiments on stable coins are doing in the fallout? What do you think investors have lost confidence in stable coins?
I think when I'm discussing about that with my network, and they came to me, their first reaction was, if the stablecoin is not capable to keep the peg, it defeats the purpose, and it shows weakness, vulnerabilities, and there is something wrong. And I think we have to agree with that, and there is some area of progress. But at the same time, technically speaking, it's all about accountancy and math and credit scoring. If at some point one specific asset is at risk, there is a reaction. So a way to tackle this is potentially to increase the capacity for the stablecoin issuer to intervene in a much bigger manner on the crypto exchange. We can also note that a few crypto exchange started, if you remember, Michel, to stop the conversion of USDC against other stablecoin, to also reduce the contagion across the panic. But again, if you pay attention to the monthly attestation of USDC, the way they allocated their asset across multiple banks, the risk assessment of the USDC, I think, was not as bad as some of commentators said. Yeah, that's our view here.
Let's talk a little bit about crypto liquidity in the face of some of the major shutdowns. So Silvergate Capital, central lender in the crypto industry, said it would be winding down operations and liquidating the bank. Signature, strong crypto focus, much larger than Silvergate, was seized on Sunday by banking regulators. How do you expect crypto liquidity to be impaired from the shutdown of these banking players?
So something interesting, and maybe to just say 2 words about Signature Bank, because Signature Bank was definitely identified as a crypto-friendly bank, and I confirm that. But most of the business and revenue stream of Signature Bank was not in crypto. It was in lending, real estate in New York, right? It was commercial lending and real estate activities. So I take the Fed change with the Signature Bank as a form of contingency plan to stop a potential bank run, such as what we did with SVB. So in terms of liquidity, Michel, to be precise with your question, is Bitcoin is up 12% since 7 days. The crypto market is back to above 1 trillion. So I think the liquidity is still around. USDC is back to almost $1. Tether is still around. Binance BUSD is still around. So I think liquidity is still there. The next question is for Web3 players who used to work with SVB or Signature Bank, how can they restore their operation? I think that's the most important part. If they had just one bank account, then they may be in trouble. Yeah.
Let's talk about what this means for players like you in terms of establishing banking partnerships.
Yeah.
So some say that Silvergate's establishment of SEN, the Silvergate Exchange Network, really helped fuel the institutional adoption boom that allowed for crypto bull markets to be a reality. So now, do you think that because of this crisis, Silvergate and Signature, this raises the question of the ability of firms that are native to the digital asset industry to establish banking partnerships?
That's a very good question. I think the way I look at it, Michel, is if you make a parallel with a fintech industry and the fintech trying to disrupt the banks, right? There was lots of communication around this in 2018, 2019, saying fintech will disrupt the bank and so on. But finally, in 2023, banks are still around, and banks have tried to figure out how not to be replaced, right? So I think in this difficult time where regulators are trying to size the risk of digital asset bank and partnership with traditional bank, you still have appetite coming from the traditional banks space to open up progressively some bank account for either Web3 players that have a clear model or Web3 players that already have a traction and have not been too hit in 2022. And you can see this in the region, you can see in the US. You have other banks that are not in the top 2 regional bank or too big to fail banks that still wants to open bank account for Web3. But it's the information is not too disseminated because they also don't want to alert any. I mean, I don't know, but yeah.
All right. Let's look a little bit deeper into what this crisis could mean for the cryptocurrency industry as a whole moving forward. So Goldman Sachs analysts have said they no longer expect the UN Federal Reserve rate hike at the March 22nd meeting to move forward with such a great hike, 0.5%.
Yeah.
In fact, they're not expecting a hike at all. So do you think any change in the Fed's monetary posture in that regard, either a lessening of the pace or maybe no rate hike or a pause in rate hikes, could that actually be good news for the crypto market in that you'll see more allocation to risk assets then?
So the short answer to this is yes, for sure. The accommodation of the Fed and monetary policy decision maker over the past 10 years have been extremely favorable for the Web3 and for the crypto space. I think the Fed and the central banker are facing a real dilemma, which is, we all know that, to fight too rabbit at the same time, which is inflation to control the price, and at the same time they don't want banks to be hit by the interest rate hike. So short answer to this is yes, it's favorable to the crypto market if they stop hiking and raising interest. And at Trade Together, we think that they are going to mark at least a pause to review their book of regional banks and too big to fail banks, the big players. But at the same time, it is probable also that they will have to find the tool to monitor also the inflation, right? The pricing inflation. So that's really a dilemma. And all the best to them.
Well, thank you so much for joining us. And just to sum it up, USDC may have depegged, but you think it is going to survive Silicon Valley Bank's collapse. Sure. Thank you so much for joining us. Geoff Ira is co-founder and CEO of Trade Together. This has been Money and Me. Thanks for listening, everyone. I'm Michelle Martin.
Money FM 89.3